Learning objective 2 is about how to calculate depreciation. You're going to need to know some stuff before you can calculate depreciation for an asset. The asset's basis, the method that you're going to use to depreciate the asset, recovery period, and the convention. Also, the chapter is broken down between how to depreciate personal property, such as equipment and machinery and stuff like that, and real property, such as buildings and land improvements. So first, we're going to talk about personal property depreciation. The first thing to handle here is figuring out the method you're going to use. Now, the typical method is under the maker's modified accelerated cost recovery system. The typical method that we use under that system is the 200% double declining balance. We heard of that method in Principles of Accounting, or we learned about it, and that's the primary method that most companies use to depreciate their assets for tax purposes, their personal property for tax purposes. So we're going to go forward with that assumption that we're going to use the double declining balance method. Next, we have to figure out the recovery period. That is, how long is the asset going to be depreciated over? The IRS provides tables here, so it's not really up to the companies to determine what their life is. The IRS provides tables so that companies can't get aggressive and pick unusually short lives. So these are the typical scenarios. You have furniture, fixtures, equipment. These kinds of assets will have a 7-year recovery period, and this middle column is really the most important one. Trucks, basically, this includes cars too. Will have a 5-year recovery period. So 5 and 7 are the two primary periods that you use. It doesn't say it over here, but computers and any computer-related equipment is also going to be 5-year property. So we've got the method, double declining balance. We've got the period, either 5 or 7 years, depending on the kind of asset it is. You'll see here in this exhibit, it lists some very common assets with their recovery period. And next, we have to talk about conventions. I'm going to talk about that in a separate video.